All right, good morning, everybody. Today's Wednesday, June 25th, 2025, and today we're going to be looking at the market one more time again, based on what I've been looking at recently. We have the same thing as yesterday, kind of like we have at 10 a.m. This guy's going to be speaking. Let me lower down my music a bit, a little loud. All right, I'm going to double check to see if I'm live here on my channel. Okay, yeah, so it looks like I'm live. All right, cool, perfect. So we're gonna be looking at the charts today. Same deal, kind of like what we were doing yesterday. I'm a little bit more caught up than I was previously, but yeah, I mean, today doesn't look like there's gonna be anything fruitful in terms of day trades. We'll be looking into the charts for any scalp trade ideas. I'll I, I doubt I'll take any trades today, but we'll see what happens. I mean, like right now, things have been going so tight in terms of take profit level. So if we go back to our MQ chart, I told you guys that Monday that we've been looking at these highs for a draw on liquidity, or just kind of like the magnet, if you will, of where price is going to be tending to reach up these levels here. Let me look at the daily chart. Up this high first, then possibly this high even. Just trying to make new higher highs in the stock market. But recently, because of what's been happening lately about uh, wars and stuff, we were thinking about it potentially like baiting people, so making them think that that's going to be the draw, and that only retrace back down to discount, only to go back up higher. There's still, um, well, yesterday I was proven incorrectly for that big, large, bullish candle. But I caught a nice trade yesterday. Yesterday I left you guys with this comment saying that we'll be going up price, we'll be going up higher from here. So that was actually me looking at this chart here, going here to yesterday. And I guess I was very rushed. I was taking into account the incorrect daily range. I was actually trying to make into account this one right here. Let's see. Let's see here. Actually, as a matter of fact, I don't even remember which daily range I was looking at. I think it was like when I went like from here to here, this low to this high. Well, anyways, point is that the daily range was from this high to this low. Took this high, took this low. So sell stops were taken, buy stops were taken. This is our daily range. Price made a low here when compared to the US 500 low. See, we made a low, higher low. Here we made a low, lower low. So that's kind of like the S&T divergence that we were looking for. Cracked over to 25%. In a time where we were thinking that we were going to see higher prices. Of course, with high resistance liquidity run, it made these conditions a bit choppy. I actually ended up getting a trade idea, not just there, but also at the 50%. So you notice that we were weakened on the 50, so I thought we were a little bit weak. But no, we only went back down to dip into discounts to 25%. Let me reverse these levels because they're. You know, we went to 25%, and then went up. And I was like, shoot, I missed the trade. And no, not really, because I noticed that once we broke the 50% level, I was like, okay, this is a good chance for it to keep going higher. So let me get on this order block, right? Order block right here, this black candle. So I got into a buy limit. I had tied myself into the 50% level, had a 40 handle stop loss, and my intention, my first goal was to aim up here, right? But to be honest, that's like the magical goal. Of course, we ended up hitting it this morning, but I didn't want to get too greedy and and I wanted to get into something that's a bit more reasonable. So I ended up going to like a 3R trade yesterday, and to my luck, to my luck, right? It ended up getting tapped around the New York PM. So it was quite a hole from 10 in the morning to 3 p.m. And I noticed something about this trade, right? That whenever I'm involved in something, the whole day, especially in the day trade, the whole day that's all I'm thinking about. I could be like in a meeting, I could be having a call or lunch with someone, and literally that's all I'm thinking about. And that's something I think I need to fix within myself, because if that's really all I'm worried about, then I'm not really making the most out of my day. So my day, and this is a challenge for me, that sometimes throughout the day, I don't find myself being as productive, or I don't consider myself a success unless I'm inside a winning trade. And that kind of like promotes the idea that I'm only successful if I'm making money, which is in a sense true, but at the same time, there's a growth aspect to it. So, of course, the day is not always just going to be about the charts and making money. Um, your self worth as a human being has to also be valued in the way that you form connections with other people, the way you, for example, do a workout, or if you socialize with friends, catch up with someone you haven't seen in a long time. Like, those moments are also something that's worth its value to boost up your self worth. And a lot of people, they don't have self worth. They just like, no, I want to like make money and make my ends meet. And I totally understand. I understand the rush. I understand the rush, but at the same time, like if you get into a losing trade and you're always constantly checking the markets throughout the day, then I mean, are you really enjoying your life? Are you really enjoying your day? It's a rhetorical question, but like in my case, I noticed that that's something I'm battling with, and it's not easy because it's like a constant exercise. Every day you want to look into these charts and look for an opportunity for you to be right, but at the same time, you can't let this day slip by. You got to make the most out of this day because we're only going to get this day once, and we're not granted tomorrow. So enough spiel. I know that's something that I wanted to share because I'm still learning. I still want to get accurate with my trades, and I still want to be able to have a good life because it's slowly approaching. Uh, you know, and I'm beginning to feel the back pains. So, just something to make in light of. All right, but anyway, so this morning I was looking into opportunities to get into trades, perhaps maybe in London, Asia, taking into consideration the dealing range theory, which I've been learning about on this guy's YouTube channel. So, one idea I had was this one. Check this out. So, if I pull up my daily markings, we had this balanced price range. See that? This sell delivery here. Let's see. From this high to this low was met with sell side, and this low to this high was met with buy side. Okay? So this makes this high to low and low to high balanced. So from this point onwards, from 2 a.m. onwards, I want to see price respect this range and want to get out of this area with speed, or at least not make it down to these levels. It could maybe take a turtle soup entry down here to these lows, but you wouldn't want to, especially because it's already also stacked with another balanced price range. So what am I saying here? What I'm saying is that these Asian lows should be protected. See that? This whole range from this high to this low is Asia's range. So when we entered London, or after 2:45 a.m., we were consolidating up here. You can call this time distortion, whatever. But look at what I see. Do you see? Do you see what I see? No. Well, it's another dealing range from this high to this low. See that? And then if we want to make price go up higher, we have another one right here. This high to this low. You don't see it here in the 5-minute, but you see it here in the 1-minute chart. See? Take a high, take a low. We took this low too. So we also have a dealing range here. And we're looking for price to what? Respect the medium threshold of this balanced price range. Okay. Let me change the quadrants. That's okay. Perfect. And what are we looking at here? We saw price dip down to this lows, and again, this is London session, folks. Do you see the SMT? Do you see the SMT, guys? Give me one moment. Okay, I'll show you. This low, this high. See that? This high to this low. Ah, okay. So smart money is accumulating buys or longs to get up to higher prices. What is price doing in the meantime? Sure, we're having, what you say, time distortion, but if you count this, right, we close about 25%. rallied up higher, 50%. Okay, back to 25. We had to create this SMT right here. What does he see? Another balanced price range. Right? This high took out this high, this low took out this low in a time where we had SMT. Okay, price closed about 25%. Okay, closed about 50%. Where are the best buys? Down here. Okay, where are the best longs? Well, since we crossed the 50 would be a good level. But you could also trade back down to this gap. You see that price didn't really quite tap it, but you know, you could have had a couple of entries. You could have had the 50%. Now, what I did yesterday was because I was getting on a 50%. Oh wow, look at that! And we had a 10 handle stop loss. Look at that. You don't want to go in full risk. Full risk, depending on what you're doing, could be 2%, 1%, half a percent. So when you're at 50, you want to go half a risk, have a position. So instead of 2%, you're risking 1%. Instead of 1%, you're risking 5%. Instead of half a percent, you're risking 1/4%. Right? Because you're getting it more into fair price. And depending on how you've been back testing, price can still go back down to 25%, or even head down to the external side. So you have to be kind of careful. I'm still trying to trust this logic, but it makes sense because it's something that I've been back testing. So you get into half a percent. Stop loss can be 25%, or it can just be the total amount of handles you're willing to risk. So in this case, you would be risking like 20. 20 is a good, 20 is a good stop for me, right? In my case, because this is a scalp. This is the Nasdaq, and Nasdaq tends to move a lot of pips. I'm sorry, a lot of handles. So you would be aiming for these highs, right? That's the lower fruit, right? We have high, low. Look at that fair swing. So you would be aiming for this external range liquidity. You could also even reach for this external range, possibly even to PM session highs. See that? There you go. And that would have been a nice 1.36 our trade. Okay, so that's what it means a scalp. A scalp, you're not looking to get like 3 yards. If once you get really proficient, I do believe that you could be able to get really confident in your trades and possibly even reduce that stop loss. Okay, so what if we did have like a 10 handle stop loss? Look at that, almost a 3-hour trade. Beautiful. So the more confident and the more the stronger you get in terms of reading price action. I say stronger because this takes a lot of mental toll. Before I used to be a wild cowboy, used to be able to take these kinds of trades, but because I've been so constantly burnt out, like it's a little difficult for me to get back into trusting these sorts of price action. But obviously, you want to get yourself into a level. Well, I want to get myself to a level where I'm able to trust the logic to the point where I'm able to take these kinds of trades. We're talking 10 handle stop losses on NQ, which is stupid risky, but if you know what you're doing, then something like this can make sense. Align ourselves up to 50%. Let's move this out of the way. 50% is down here, right? You would have been able to get up on a buy stop. Boom, triggered. All right, a little bit of heat. Been 10 handles. Boom. 2.5 RR trade. Great. You risk 2% of that. It's already 5%. You would have been halfway there. You risk 1%. You would have been halfway there for your prop firm. Prop firm challenge. The top step. The top step prop firm challenge is something I want to try back again. I've been just trying to take the time at the moment to practice and to learn how to read. This is not easy stuff, ladies and gents. This is takes a lot of effort on someone's part to not just learn how to read, but also have the energy and the enthusiasm to go and do something deliberately that doesn't promise you or doesn't yield you any form of return. Now, that's why it makes it so difficult sometimes to get up and read the charts. Because if you're not promised anything in return, why make the effort? And if you think about it, that's kind of like how people who are I don't know, down bad are living their day-to-day life, What's the point of making an A+ effort if nothing's really promised for me? And that could be taking something in a positive light, or it could be taking something into a negative light. And this is what I mean by training is a lot more than just looking at charts. It's about how you standardize your life. It's about how you design your rules, your protocols, that you're able to interpret like your surroundings. This goes deep, and the more you learn about your faults, and you start acknowledging your demons, and you start designing protocols on how to deal with them, like mastering yourself. That's why people who master themselves have a lot more self-control, a lot more healthier dialogue internally. They're much more optimistic. Yeah, there could be doomers, but um, at the same time, they're able to manage what it is that they can control, which is their life. And that's kind of like a level that I want to pursue. And it's hard because no one's on your side. Um, Trading is a lonely profession. No one really out here is watching you make mistakes or creating your faults. But I mean, once you start managing yourself, nothing in this market feels enticing for you to take a trade today. Unless you yeah, unless you see a lot of things, a lot of confluences being stacked up in your favor, then yeah, that's when it becomes worth it. But you have to get yourself to a level where you can read. Damn, why am I preaching a lot today? So yeah, so today, I mean, in particular, I'm not seeing anything, anything worth of an entry today. So that's why I wanted to select you as well to just kind of like talk about these kinds of things, talk about emotions, talk about what, and just be able to look over the charts with you guys and just see how we're just hanging out and chilling, charts and chilling. What I'm trying to say. So let's see here. So that's the daily image that we had before. What's this? Okay, we don't know what this is. So we'll delete that. What is this rectangle? We don't have it. I don't see it here. Not of importance. Okay, current event horizon. That's another thing I have to look into more. Oh, here you are. I'm like, where did you go, man? Come back. Alright, so that's the daily setup. This is the weekly setup. In terms of what's balanced and what's not. It's a dealing range. Something else I've been studying as well has been the bonds. I know, exciting, right? Bonds and the interest rates, and kind of how like that goes hand in hand with the dollar. And how sometimes when you're doing intermarket analysis, you want to take a look at what the dollar is doing, whether or not you're going to have a risk on or risk off scenario. And lately, things have been pointing up bearishly for the bond market. So I saw here that we had an imbalance here, volume imbalance, that the price has been kind of just wicked there. But we also had an SMT in the form of inefficiency. So if we compare that to this is the 30-year, this is the 10-year bond. We'll see that we'll have that same, oh, where are you? This candle. See how we had that imbalance from this high to low, flip that volume imbalance with the SIBI, and then price is closing up there with a body. But notice that here with the 30-year, we're kind of just wicked. We're not even out of the imbalance yet. So I kind of count that as the inefficiency SMT. So a high, low to high, possibly reach down to this external reach liquidity. Oh yes, same goes for the what's this? This is CN. Oh, yeah, same thing goes for the 10-year interest, right? So if bonds are going down lower, interest rates are gonna go what? Gonna go up higher. That's why I had this arrow here pointing that we're possibly gonna be using this buy side liquidity that was engineered when it was wicking up there into that gap, so that we can go boost up higher, possibly reach to this external range liquidity. When? Before June, before the end of the year, pretty much. Hopefully, we'll be able to do that. And if it does that, then we'll have different. We'll have a risk. Let's see if you. Sorry about that. If interest rates go up, people will want to invest more in the dollar. So the dollar should be increasing its price higher, meaning that we'll have what a risk-off scenario. So you gotta be careful trading stocks. Stocks could start getting down lower. Let's see here. Where is my markings? See, that's what I mean. All right, so this is the daily chart on the dollar. And I was aiming for this liquidity, got hit. Okay, we have a couple of balanced price ranges. We had a standard deviation kind of like projection that we had here, and I just took the quarter levels from this low to this 25%. You get that, you get this range projected down by 1, and you get this number, 96.962, which is a number that I got a couple of live streams ago, where I streamed on Saturday morning, and I told you guys that that's where I think price was going to be heading before a specific date. Let's see here. Okay, let's see, was it this one or was it this one? I think it was this one, yeah. So I think before the year ends, we're going to be able to reach down to these levels down here. I wish I had something more specific. But you'll see that we actually closed the 60-day range, and now we're in the process of creating a new 60-day range. So if we take what we opened in, let's see here. I'm going to call this the 3-month opening price, and we're going to be using this as a filter. I kind of think of it like a Sunday opening, or like a new day opening at midnight, or like, yeah, a Sunday open. You'll notice that on month 8, you'll learn that if you have price trading above the opening price, you ideally want to get into longs. If you're bullish, there's a buy program. If there's a sell program, you would ideally get shorts below the opening price of the new candle. So in this case, I still believe that we're on a selling program for the dollar. So since we're already below the opening price of the 3-month range, and anything below that will just be an ideal sell. See how that ties in together? And now, how far should we go? Let's see here. It's 40, 50, 60. So that's September 12th. This should be our 60-day look forward. Yep. Okay. Here's our extreme low and our extreme high right here, this candle. And I just put it into perspective that, like, hey, we're in a discount market relative to the 60-day look back. What else? We'll update our markings, right? So we'll compare to what? High to low, lower high, lower low. So this is our 60U failure swing, or what they call mitigation block. This will be relevant. So that price, if it goes up to there, it'll be used as a premium rate or resistance, or eternal soup if it reaches up to this high, so that we can get head down lower. Let's see, we have a high, low, lower, high, lower. Oh, look at that, same deal. So lots and lots of balance prices here for the dollar. What time is it? 9:32. So the stock market just opened. We'll have a look at that in a couple of moments. Just want to make sure that I finish this first real quick. Let's see, 75%. No, we're not there yet. So we'll compare this high Yeah, this. Okay, so then we'll have this. Come on, little mousey. Perfect. There we go. And now look at this. Look at what happened when price opened up. Price legit opened up on June 25th, June 20, sorry. Traded back up, and look, it didn't even touch the medium threshold. So that's what extremely bearish. I consider that as extremely bearish. We have this volume imbalance from this high to this low. We're just gonna have to see what price does. Are we gonna be using that as volume imbalance to head down lower? Trick price up to just go to this order block and then sell? We're about to see. We are about to see. Uh, Alright, so we finished marking up the R dollar. I want to make sure this is inside the 3 month. Perfect. Perfect. Just like I use the US 100 CFD contract. One thing I like to point out too that I realized was the CFDs and the futures the futures. You'll see that on the CFD we've actually matched the stock market highs right here, but in the futures market we still have yet to reach those highs. See that? It's gonna be like skip showing you guys. Okay, CFDs, futures, CFDs. So that's a little something that's interesting. See that price went up higher. Now another way I like to see price. Let's see here. Well, look, I'm scared. I was like, "Where's my kill zones, buddy?" So another way I like to compare price is through the hourly candle, right? So right now it's what 9:30. So you want to see how price has done starting from 7 a.m. So from 7 a.m. I mean low to high. Whoa. Okay. We have this price external ranges up here. So we have this price action right here. Okay, do we see any dealing ranges? Not at this time. Let's take a look at the 8:30 to 10, 8:09, sorry. I think I see a breaker that we can use as an inversion. So we have a low to high, higher high. It's going to be irrelevant until 10. You see that once the market opened, we use that as support, trade up higher. See that? Do we have a dealing range? Yes, we do. High, low, higher, high. See that? Now we want price to ideally trade down. So, see, this is where I wish I had a 30-second chart because you would have seen price probably close up to 25%. You would have gone in at 25%, or you would have gone in at the inverse level of this medium threshold, and where higher. And that's fine because we're still what under equilibrium. We kind of have to have that slingshot effect for buys. Let's see here. Nice stop loss would have been 20 handles. Remember, it's a scalp. We would have been aiming up for here. 1.3 hour trade done. We'll see. How do you make a trade like this worth your time? In my opinion, and at the time of my understanding, you make it worth your time by risking more. And at the bottom right, you'll see in my on my live stream that this is not investment advice. So please don't take my advice with a grain of salt. But if this was up to me and I'm taking a prop from challenge, 2% risk here. Just one moment. I'm gonna look at something here. Okay, so around 9:40, because we're dealing with delayed data, I want to look at the futures market, see our opening range gaps, and whatnot, and see how its price has been reacting on those levels. But price should still be able to go up higher. Just saying. How high? Well, let's take a look at the dealing range, right? Excuse me. See this? Took 1/4%. The range. Stack that up. You can even see price upside up to these levels. That's just a projection. And again, oh wait. It's been a minute, but I used to be someone that would look into the 30 seconds chart, but not with this brand new understanding in price. I really want to look at the seconds chart, see just how we can use this as an advantage. So just like yesterday, I think I'm gonna head over to just being online until 10 and then seeing where things go. I don't know if I can, right? I don't know if I can pull it up, but maybe we can look at the FOMC, whatever this guy is going to be saying. I don't really care about that guy or what the things that happen at that clock. It's just what interests me more is like how that news how that news affects the markets. Okay, it's 9:40. Okay, it's 9:40. See that? Sorry about that. There we go. There you go. See, for futures, we haven't really met up the profit objective just yet, but in CFDs we have. Okay, so what was I looking to do here? Oh my. Yeah, support, perfect. Do we have a dealing range here? Lows taking, highs taking. Yes, we have a type 1. I mean, I'll consider that a type 1, but let me see here. Oh, yeah, let's see. Do we have the SMT? SMT. One that's slingshot effect, right? So let's see. Sorry, this is the 500. Trying to look at the ES here. Okay, let's see. Oh, look at that SMT, dude. You had a low to high. Oh yeah, I would totally anchor my hips from up there to down here. Remember, we're looking for that slingshot effect. Boom. And then what? What's another balanced price range? If you look at the 830s, right? 830 from this low to this high to 9 o'clock. We had that breaker. High. There you go, 930. So we'll use this other balanced price range. And here's the thing. In my opinion, because it was never mentioned, right? But there is such thing as an inverse balanced price range. Inverse. So if it breaks through it, right, at a time where you're looking for a buy program or reasons to get into longs, you want to treat this as support now. Because look at that, we closed above it, kind of like a fair value gap or like an order block. You can get into the inverse side of it, and look at that, we worked down to it. In addition to SMT, whew, anchor your fibs high to low. I really, really wish I could look at the 30 seconds. Let's see, Q. Is there someone in here? Let's see. Yeah, this is not gonna let me. I just want to see this for myself, you know, like it's. Oh, hold on, we have a chart. Snap. We only have the 1 day. Okay, how about the? I think this is it. I think this is it. Okay, we have. Not compatible. Great. There was a website. Was it bar chart? It was like a website that really allowed you to look into the markets. Let's see here. Let's try NQ. We're in September now, so I think it's NQU. I just saw it here. 2025. Full chart. I would take a. Doesn't give you the minute either. Well, what is this time zone? Yeah, no, it's not gonna give it to you. Alright, so let's take a look at the opening range gaps and seeing how we're reacting off that. So let's start her first with the. Where are you? Where are you? Oh, look at that. Also, to think of the first fair value gaps. Have we had it yet? Not yet. But on the US 100, do we have it yet? We don't have it just yet either. I just see a bunch of volume imbalances. Sorry, yeah, I know. We were gonna look at the opening price range. Let's take a look at the 15-minute chart. Got a little distracted there. We have one, two. Oh, where's my third? Oh, here you are. We'll take you since yours seems to be way at discount. But we'll take this one actually. Okay. Now we gotta look at regular trading hours. Ooh, so look at that. What kind of opening do we have? Premium opening. Okay, we had a close to open. That's our opening range gap. So in the first 30 minutes of the OR range, which is from 9:30 to 10, there's a 70% likelihood that price will reach down to its consequent encouragement of the opening range gap. And so that got me thinking, like, are there other ways in which we can use this logic into another? And what got me thinking lately has been the opening range gap in the form of electronic trading hours between the hours of 3 o'clock to midnight. Why those hours specifically is because those are the times that IPDA operates. So from midnight to 3 o'clock is the actual IPDA range. So I was thinking, well, those the only times we can look at midnight is through electronic trading hours. So that got me thinking about like the closing at 3 p.m. and the opening at 12, which is also the open cloud, which is a range that's used to project daily highs and lows. So if we look into the electronic, let me get rid of that and open up this folder, you'll see that I've actually marked the opening range gap from the close at 3 p.m. Should be up here. So the opening at midnight. And notice how price was referring to these levels. So I'm saying that from midnight to the first 30 minutes, where are you? There should, kind of like the 9 a.m. open, there should be a retracement to its consequent encouragement in the first 30 minutes, right? From 12 a.m. to 12:30. So, let's see here how they get the opening here. And look at that. It trades to the consequent encouragement. Crazy, no? I was thinking like, whoa, could it be the same logic? Am I going the right way? And if that's the case, what are other ways that we can look at OR ranges and kind of like predict that it's going to go to some form of a consequent encouragement? To what level? Uh, and that's something that got me thinking lately. I mean, this could be I don't know if this could be a model, but I mean, we had a solid liquidity taken, busy, old high, order block. Could be maybe. I just don't know. See? Acting nicely up these levels. Didn't escape out of it. So there's a discount open. I kind of treat this as like a SIBI. So it's going to be like a form of a use as a premium array. Once we had this, we really want to see price shoot down lower, but it didn't. It was consolidating. Boom, closed up here. Okay, now it's an inverse SIBI. So we want to be using it as a discount array for price to keep going up higher. So 70% expansion, order block, expansion, immediate rebalance, and accumulation, expansion again. We left this busy, so this could be a breakaway here too. And now look at where we are. Another thing I really want to get good at are implied, I guess, order blocks, like getting in on those kinds of entries. Like before we even had this candle, we just had these sell side delivery in the form of two little down candles. So I really want to get confident in my trades where I can just get into the opening, get into a buy stop, and then to keep prices, let it keep going higher. There are in the mentorship you kind of get taught that, but I really just want to get confident in learning. Just kind of get involved in these charts, man, because there are a couple of ways you can do this. It's crazy. Okay, so there's also talks about like implied dealing ranges. So if you have a price in mind, what is this even? Oh, this is my dealing range, right? Oh, that's interesting. But look at what's even more interesting on that. See how it used that 60-year low? It's kind of wild. Medium threshold reaction. This is nuts. Okay. So remember how we were talking about earlier about price using a slingshot mechanic? It's a dealing range. Took at the high, took at the low. Okay, did we close above 25%? Yes, we did. Yes, we did. Okay, what time is it? 9:54. So we're gonna have that spooling in price right now is the macro. Okay, sell side delivery, buy side delivery. Okay. Forty handles. Aim up to. Oh right, this is the CFD. So do we have S&T here? Let's hide you real quick. Oops. Come on, buddy. Where are you? Stop fooling around, man. Okay, we have like a 3 drives pattern going on here. This looks good. This looks good. Oh, whoa, 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 whoa. Hang on, guys. Uh-oh, we have an interruption, guys. Hang on one moment. Okay, so we hit 10 a.m. It's now 10 a.m., so we should be having some red folder news at the moment. Okay, I'm back. So let's see here. Okay, so that would have been a nice trade there to get into. Let's see here. We have new ranges that we can be focusing on right here. We have this low to high. We have this higher low, higher high, higher low. This price at this price. This high to this low. See that turtle soup? Oh my gosh, dude, this is so annoying. Sorry, guys, I'm a little dealing with technical difficulties right now, and it's super annoying. Okay, come on, yes, open. It's so annoying. OMG. I'm just checking on something. But yeah, I still feel pretty bullish that I think price is going to keep going up higher. We'll see though. It's always interesting how these websites have so much. They really want to. No, stop. Okay. Okay, at this way to take into account the balanced price range that we had, and notice what I say right here. Total soup entry out there. Then we have the 30s, 30s, 30s. Oops. Here or here, the 25% doesn't matter. So just start releasing the quarterly. trying to get my markings up here. 9:30. We have the high. Okay, we made a new low. We want to see retracement up to 75%. Sell down lower. This also looks weird too. No, look at that. Excuse me. Okay, we're digging up to down to these lows. Wow, completely contradictory to what I was thinking about all day, which is fine. How low can we be going for? Back to these highs, maybe? Back to London open highs. London open highs over here. We're just looking at price. We just had the 10 a.m. news. See, these are the times where even though your analysis was like not up to par, you gotta be with a strong mind that you can still do this, and that you have to give it another shot. Don't self sabotage. Notice how the London High is also aligned with the consequent encouragement of this ORG. If we are gonna head down lower, head down there. But it's already past the 930 OR opening range, so we're just gonna have to see what happens here. I'm not liking this SMT here. I still think we're gonna head down to these London highs. Okay. We don't need this. Okay, now we want to see this used as an inverse. Did we use it? We're treating it as such. Why treat it as an inverse? Because we closed below it. But we're still in the minds that we're gonna see for higher prices. let's take a look at what kind of weather we're dealing with today. So if we take over to the high to the low, does this look like more than 100 handles? I'm sorry, 75? Yes, we're at 70, 94 handles. So these are prime conditions for low resistance liquidity run days. So we should see price shoot up. Let's see though. And 1024, right? So then we should be using what's left of it from here to here. Don't get thrown off. That's this US 500 versus, which is 10 minutes ahead of the US 100. Sorry, the US 500 is 10 minutes away from the ES. And we're reusing 100, and they're perfectly in sync thus far. We have a low, high, you know, these equal lows. Well, I'm tired of this. Let me just look at this up. Price label. So between 245.7. 246. Relative equal lows. Explanation here. Okay. We'll see if what price react in such a way where we can do something like this. 40, 40, 40. That's the new quota. And go up higher. I don't know. Let's see here. What's gonna happen? I was looking, let's see. The one thing I don't trust about this trade is that this dealing range low hasn't really tapped an inefficiency or liquidity that I would have liked to see. So it's 10:30 now, and we should be looking at this now. High low, lower high, lower low, or oh come on, what? What's it called? Extend prices to the right, and move you. Where are you? What is this? Oh, one of them entries. Yo, what is this? All right, out of the way. Okay, so we should be seeing something like this now. Where this is going to be acting as a premium array. Let's see here. It's not 11:30 yet, so we're still referring to this lower high. All right, guys, I'm getting a little tired. I think that's it for today. But we're reacting back down to 25%. I'm not really confident about this trade, to be honest. I just have this thing on just for marking purposes. But if we can dip back down to here 25%, maybe boost above the mitigation block or failure swing here, aiming up for higher price. I mean, this is a type 2 right here. the type 2 dealing range, so we could potentially see a reversal coming soon. She said, you know what? Hold on. Let's see what happens. Ooh. Yeah, sure. You know what? Yeah, this looks like a pretty good range. I mean, we're looking for bullish prices. We're in a type 2 dealing range. Price just closed above 25% of it right here. So this whole entry right here would have been nice. And then you would have been aiming for this external range liquidity, or possibly even up here. So let's just let this play. But I think this is the trade for today. Uh, Let me mute myself real quick. Be right back. All right, guys. So I'm gonna start closing the shop up here. If you like, we've tapped into the 25% level, and again, we're predicting that price will set higher prices. We'll see what happens. We'll be able to reach up to these highs, maybe. Only time will tell. So we'll see what happens. Maybe I'll catch you guys up tomorrow again, and be safe. Thank you for watching. Take care.